Welcome, my name is Vishal Tekshanani. Today I'm speaking to the Group Head of Afterpay, David Hancock, and we're going to cover the company's growth ambitions as well as some of the competitive threats and risks that it faces on the horizon. David, how are you?
Very well, thanks for having me.
No problem. So David, Afterpay is of course one of the stocks dominating market headlines and news headlines. And I want to share some nabtrade data with you just to illustrate just how popular this stock is among our customers. So, on nabtrade, it's active investors or short-term investors tending to favor Afterpay, and their position sizes in your company tend to be 70% bigger than their other holdings. And what we've seen is that over the last month, 75% of the time, Afterpay has actually made our top 10 most traded stocks list. So it's up there with the ASX 20 companies. So with that data in mind, what would you say are some of the longer-term prospects for Afterpay? Because right now it's being favoured by short-term investors.
So when we listed about 2.5 years ago, we had about 13,000 customers and we had 100 merchants. Today, as we stand here, we've got about 17,500 merchants and we've got over 2.3 million customers. What definitely is happening is we're changing the way that people shop and pay. So the long-term prospects for Afterpay, we believe, are continued growth in customer numbers, merchants continuing to increase in size, but also in the longer term, we've just recently announced that we've gone to the US. We've been very pleased. It's early days in regard to the US expansion, but we're starting to see similar types of take-ups over there. So the longer term opportunities we think are very good for our merchants and also for our customers, so hopefully that should benefit shareholders.
Okay, so let's turn to competition. When we think about the competitive landscape, Afterpay's business model is buy now, pay later, and you're seeing a number of other entrants and other providers trying to, I guess, compete with you in that space, Zip Money, OpenPay, etc., and even in, if we think internationally, things like PayPal Credit. So, how are you managing that competitive threat, and will that impact your ability to acquire merchants and those 4% gross margins that you're seeing right now?
Yeah, it's a great question. It's a question that we get asked a bit. What's quite clear is that in the buy now, pay later space, there are a number of different providers. What's very unique about Afterpay is that we sit at a completely different spectrum than many of those other names that you put out there. The reason why is that we do not charge interest. We do not allow customers to continue to utilise the service until they keep it in good order. And it's very clear around what the proposition is. Merchants pay for the service, and for the vast majority of customers who use it, they use it as a free service. That's a very different model than many of the other competitors that in the buy now, pay later space. And that, I think, is the main reason why we've had huge engagement and delivering the results that we're delivering.
Okay, so responsible lending is something you discussed about in quite a lot of detail in your report. And if we think about some of the concerns that market watchers and consumer advocates have it's with respect to buy now, pay later being another way to accumulate debt that they may not potentially be able to repay. So can you tell, and that might lead to loan losses for you. So can you tell us about what you're doing to ensure that spending patterns and consumer behavior on your platform is sustainable?
I think the really outstanding thing about our result for this year was that we've been able to manage our losses down from 0.7% in the first half down to 0.4%, which really shows since when we IPO'd, we had losses at about 1.6%. We've been able to manage our losses to get them down to 0.04%. That's been driven off the back of a very solid process about the way that we assess customers and the way that we actually look at verification. So we recently introduced a number of different changes to the ID verification, which really started to deal with, in a much more granular way, some of the issues that we were facing around misuse of the product. Okay, that's resulted in significant decreases in losses. And so for us, at the heart of what we do as this product is really about responsibility.
So last question, you've expanded into the US, you are expanding into the UK, you made an acquisition as part of your results. Can you tell us more about that acquisition and with the rapid expansion you're having internationally, is that adding new layers of risk that investors need to consider? So execution risk, FX risk?
Yeah. There's a couple of things that we've been doing in the background over the last year and a half, 2 years. What we've done is we've really built the Afterpay system on a global platform. So we moved it all into the cloud. So our cloud provider is AWS. We've been able to scale that up. We've really brought in a whole series of new people to complement what is a really outstanding team that we've got. So from an execution risk point of view, we feel very comfortable that actually we've been building the talent to support the platform going forward. When we look at the US market is a very large opportunity. However, we're keeping a very, very tight focus about where we're executing. So we're executing in our natural place that we like to play, which is really about fashion and beauty.
Right.
When we've gone to the UK and we announced the acquisition into the UK, what we were doing was we were really responding to merchants who were calling out to us to provide this service into the UK. So it's not like we picked out an atlas or a geography and said this is a big market.
So merchants were actually contacting you.
This is all about merchants engaging with us, and that's always been the way. Afterpay's really worked in partnership with our merchants, and this is just an extension of that strategy.
Okay. And David, any last points you wish to cover off? We've got the share purchase plan coming up.
Yeah.
Or any other things about Afterpay?
Yeah, so we recently announced a couple of changes to the capital position of the company. We did a placement, but what was really important for us was to recognise that retail shareholders play a really fundamental part of our capital structure. So we announced, as you said, an SPP of $20 million. So have a look on the website, there are the details on there that you should, and then go and seek advice around whether that's the right investment for you. Also that we supplemented the facility, so we added another $200 million into our warehouse facility to absolutely support this growth.
Okay, excellent. David, thank you so much for your time and for sharing your insights with me about Afterpay to our community of Afterpay shareholders on nabtrade. Really appreciate it.
Thank you very much. Thanks.
No worries. I hope you found this video informative. Now, please remember what we talked about today isn't investment advice. If you wish to take the share purchase plan up or transact in Afterpay shares, it's really important that you do your research and consider seeking financial advice. And as David said, please read all the material on Afterpay's website. My name is Vishal Texanani, and I'll see you next time.